Hi CA students, let's revise AFM and AFM Chapter 8 Mutual Funds. Practical question 23. Miss Sunidhi is working with an MNC at Mumbai. She is well versed with the portfolio management techniques and wants to test one of the techniques on an equity fund she has constructed and compare the gains and losses from the technique with those from a passive buy and hold strategy. The fund consists of equities only and the ending NAV of the fund she constructed for the last 10 months are given below from December 2008 to September 2009. NAVs are given. Assume Sunidhi has invested a notional amount of 2 lakh equally in the equity fund and a conservative portfolio of bonds in the beginning of December 2008, and the total portfolio was being rebalanced each time the NAV of the fund increased or decreased by 15%. You are required to determine the value of the portfolio for each level of NAV following the constant ratio plan. Okay, now it's more of a portfolio management question, but they have mixed up this mutual funds and NAV concept. Okay, then let's proceed with the solution. Constant ratio plan is a method wherein we will be maintaining on a certain ratio, and will be buying one security and other security will be on a constant ratio. So let's say if in this case we are maintaining equity and bonds. Let's say if the equity value increases by certain percentage, then more of equity will be bought by selling of the other security, which is bond in our case. So that's how this constant ratio plan works. In this case, they have given notional amount of 2 lakh equally in the equity fund and conservative portfolio. So the ratio to be maintained is 50%, 50 is to 50, so equally, and the portfolio was being rebalanced each time the NAV of the fund increased or decreased by 15%. So the triggering percentage for maintaining the constant ratio plan will be 15%. This 15% based on the NAV of the fund. Okay, now plotting in this table, stock portfolio NAV, first it is 40 rupees per unit, then the value to be maintained is 1 lakh each on the equity fund and the bonds. So bonds is the conservative and then equity is the aggressive portion. Now total value of constant ratio, we have to maintain 50:50 ratio. So total divided by 2, we have to maintain the ratio if it triggers the rebalancing percentage. Okay, now in the first case as told, 40 rupees is the NAV, 1 lakh each in case of conservative plan and aggressive plan, and the total number of units in aggressive portfolio is 2500. Now the second, as on January, after a month, the NAV become 25, and if we check the change in the percentage, so 25 minus 40 by 40 into 100, it is 37.5% change. Hence it triggered the rebalancing units. The rebalancing has to be done because from 40 the value has reduced to 25. So from 1 lakh it has reduced to 62,500, the equity portion. The total become 1,62,500. Since it triggered the percentage, now this 1,62,500 has to be in the constant ratio plan. Hence from 62,500 it has to be increased to 81,250, because we have to maintain in that 50:50 ratio. So while increasing this portion, then we have to reduce this portion of the conservative portfolio. One security has to be decreased and the other has to be increased. In our case it is the equity fund, and revaluation we have to buy 750 units, hence it will add up to the existing balance of 2500. The balance will become 3250. Then from 25, the NAV has increased to 36, and the increase in percentage is coming up to 44%. Again, it triggered the rebalancing constant ratio. So the the balance from 160 to 500, it has increased to 198. How? Because from 81,250 the equity value has increased by 36 rupees, right? So the 1,17,000. Now the total comes up to 198. This 198 has to be maintained in equal proportions. So in this case also, from 117, the equity portion will become 99 and the bonds portion will become 99,125. So in this case, since from 117 it is reducing to 99,125, we have to sell 496.53 units. Hence the balance of units will become 2753.47. Going further, like same thing, from 36 it decreased to 32, but the change in percentage is just 11 percentage, so it does not trigger the ratio. So no need to do anything, just keep it as it is. The balance became 99,125 in case of the bonds portion, and 88,114, like 111.04 for equity portion, and the balance of unit remains same. Then from 32 it has increased to 38, triggering the ratios. So 18.75 is the increase in percentage, hence again we have to restate it. So the total balance after this increase is 2 lakh 3,000, divided by 2 will be 1 lakh each, and hence the equity portion from 1 lakh 4,000 it has reduced to 1 lakh 1,000, thereby selling the units 72.46. Hence the balance will become 2,681. Same case goes further till the end of September 2009, and after that there is no trigger for almost 3 months. In only during August 2009, August month, so from 43 it has increased to 50, thereby making a difference of 16 percentage, which is more than the 15 percentage. Hence it triggered the ratios. So we have to, from 1,34,000 the balance has reduced, hence we have to sell the units 321.72. so the final closing balance is 2,359, and the equity portion of the fund is 1,22,683, and the bonds has to be maintained at 1,17,964, totaling up to 2,40,647.55. This is this mechanical strategy which the Sunidhi is following. Now we have to compare this with the existing passive buy and hold strategy. In case of buy and hold strategy, if we see, the existing the notional amount is 2 lakh. As in the previous portion, they have told she is well versed with the portfolio management techniques and want to test one of the techniques on equity fund she has constructed and compare the gains with passive buy and hold. The fund consists of equity only. Hence, the previous buy and hold strategy, it consists of only equity. 2 lakh divided by 40 will give us the number of units to be purchased, because the NAV as on that date is 40. 2 lakh by 40 will give us 5,000, multiplied by 52 as on the end of September, which the value become 2,60,000. So in this case, the buy and hold strategy has more returns compared to the mechanical strategy which she has followed. Hence the plan didn't work out properly. Thank you.